So excited to actually finally see this stimulus come through because I actually turned tactically positive on China back in August when the first incremental sign I saw was, well, one thing that everyone hated on China. It was probably the most unloved it's been in 3 years of down cycle, and we see earnings cut throughout. But we actually see that the RMB has peaked out at 7.3 exchange rate back in July, and incrementally it actually started slowly strengthening. So I think the macro backdrop was there for this to happen in the sense that the Fed rate cut was expected in September. The fact that it come in 50 bips was just an additional tailwind that gave policy makers in China the room to actually finally bring out the bazooka. And it really is quite surprising. I always say that China has a PR problem. Fundamental growth is there, but why valuation is so cheap and there's such a discount is because they don't communicate as well as the Fed does. It's very much reading tea leaves instead of actually having the information and trusting the data. So I'm actually very happy to see that this time it really is a coordinated effort. First, you came out with a PBOC on Tuesday. Then you subsequently had the Politburo meeting, which is the first one that we've seen that was off cycle since the COVID. It's never really done that. And in fact, this is the first time it's focused on economic reason to have a September Politburo meeting. So I take that truly with the sense of as a signal that policymakers are here to put a policy put in terms of property prices will find the floor. And if you put in that stimulus to instill confidence, that's when multiples can find a floor and finally investors can take a breather in the sense to do the primary work and come back to see potential interest. So I think there's really been last week of a buy first and think later mentality. And because positioning is so weak, it was sitting at 7th percentile historically in terms of where fund managers have been. And even now, after this whole week of rally, is still sitting at 20%. So I think there's really leg and room for this to continue. And where the Japanese corporates can benefit, then it speaks to how much fundamentally they're exposed to Chinese economic growth. But I'll also premise that this is more of a sentiment in terms of improving on valuation multiples. Whether we see improvement in terms of earnings growth and revision upward is still yet to be seen.